What up traders, what up investors, Ken here from Dyslexic Investor, and we are looking at an update video. This is an update from the particular trade that we looked at of a trader betting nearly $1.9 million on a market correction or a downswing within the S&P 500 or SPY ETF. This bet came out a couple of weeks ago. By a couple weeks ago, I mean a week and a half ago, looking at a potential downside, buying in right before kind of this gap up and just kind of selling, buying some puts very far out of the money, imagine the fact. So we're going to look at the particular trade again. The trade update here is going to be, on the 2nd of July on this particular one, and then the puts that were purchased were the 255. I believe he bought them for 52 to 53 cents, and now it's up to $1, lack of a better words, and you see that there's still a very enormous amount of open interest. So again, is this individual holding longer for this longer period for another potential swing lower? Is he going to start unwinding it this afternoon when some strength could potentially be coming in? We're going to be looking here in the chart in a second, but potentially this has been a fantastic trade, literally doubling his or her money in the market within just a matter of time. I know we're talking about $2 million of buying power that we're talking about here, but that is still a really wonderful, pretty substantial amount of trades with that size of cash. That being said, we're going to look at potentially what's going on today as well, and some outliers are going forth of what potentially could see. We are seeing a lot of short-dated stuff. Again, someone particular is trading with 4,200 contracts, but again, that is a really bullish bet. That is a potential very short-term trade here due to the fact of a potential 2 or 3 points higher and then scalping out of it. Usually when you see such high delta that's usually in the money, it's looking for some scalping plays and rather just betting for an overall swing trade. So this is why this one is slightly unique to me on the sense of a large amount of options potentially looking for an longer play out rather than a couple hours or a day or two. We're looking for a week, 1 or 2 plus, and especially with this amount of money is quite substantial for sure. So let's go ahead and switch to the chart on what we are looking at the S&P 500. That being said, I want to thank everyone who joined the live stream last night. It was so awesome. I really appreciate everyone coming out, looking at some charts, talked about, I don't know, how long did we talk? Like 2 hours? Going back and forth on different various charts, talked about overall market into some basic necessities within trading and investing and so forth. So that's the Sunday stock talk. Definitely come out next one. A lot of fun. We normally do it around 9 p.m. Eastern Standard Time. It was a lot of fun. All right, with no more intervals or no more stragglers and interruptions. Looking here at the overall S&P 500 or SPY chart. We're seeing again that huge gap down we had into Thursday, Friday, really kind of just created some selling pressure. Since today is day 3 of the overall downturn in the market, we could be seeing just a potential just kind of trading sideways and just kind of people kind of catching their breath, people figuring out what could happen, because a lot of things on Friday, it sold off pretty well, but then kind of had a tick up towards the end of the trading day. That you could see that here on the hourly chart here, and if we show extended hours, boom, click it once, kind of get a slight uptick here going into the close on Friday. Then again with the after hours trading and pre-market stuff, it's going to be highly fluctuated because again there's not that much volume in these wild times. The real volume comes in between 9:30 to 10:30 and then 3 to 4 on trading active days. That being said, what are we looking at here? Let's go back to the daily chart to give a better overview of what we're looking at. We initially thought that it could be coming down to the 200-day exponential moving average. We are fairly close to it. That's going to be around the 295 limit there. We haven't touched it or broke the wick through it at all, but actually if the this trend continues going lower, and especially if the 5 and 8 exponential moving average start crossing through the 21, we could be seeing a swing lower to the 290 level. And again, this is crazy case or worst case, if a lot of selling comes in and the bears really give a good smacking to the bull, we could seeing the 262 potentially, with a lot of downside. And this is going to have to be driven by a lot of selling on top of the news, in the sense of something substantial has to happen for us to drive that lower. As of right now, we're also what CNBC and Wall Street Bets have called it a kangaroo market. We're just kind of bouncing around here, aka just trading sideways, kind of just sitting on our hands in our pockets and just kind of waiting to see what happens next. Because on Mondays it's very difficult to kind of gauge what's going to happen for the rest of the week, and since there's not a lot of earnings on the horizon this week, and kind of earnings of the major competitors are all done, and the companies are kind of have come and passed, and now really looking for potentially what could happen for the following times. So that was more the bear case. For the bull case, it's kind of just going to be trying to keep above the 34 and the 200-day exponential moving average, and seeing that the 5 and 8 exponential moving average cross through the 21 and potentially start seeing these the wick and the ticks kind of get higher above the 305 level, potentially for another retracement to like the 310, and potentially kind of reverse these purple dots up here. These are the parabolic SAR. Usually these switch once we get some momentum coming in. Since the momentum is kind of petered off here, RSI is somewhat flat. Volume oscillator is still positive, which is good. Again, we had a lot of volume come in those 2 days, much more than average. Usually, I don't know, it's double. Again, it's been the third day of this overall downturn. That being said, we could be seeing some potential just trading sideways and nothing real action until something else drops or some other positive or negative news comes out. Various on that. Kind of wanted to look here at a longer time frame again. This is a 3-year weekly chart. And as if you look on the weekly chart, we are still above the 21 on the weekly side. The 5, 8, and 21 are nicely stacked. We are seeing some resistance here, trying on the way up around the 34. Again, we're still well above the 200-day on the weekly side of things. And if this is, again, if you're looking on the weekly side, you're looking at, instead of trading on a very short-term swing basis, like a week, 2 weeks, even a month, a weekly, you're looking at literally 30, 60, 90 days out on the weekly side of things. So just be mindful of that here on the S&P 500. I also wanted to add one more. I wanted to add a monthly time frame. So we're going to go here. We're going to do 20 years, and we're going to do a monthly, and we're going to add that sucker. Apply. There we go. And then we're going to go look at here on what we've came from, what has happened, what is potentially could happen. I think we're kind of here in the chop mode. We're still trending in on the trend on the monthly side. Again, each little candle here is going to be a whole month. We did see again that horrible month of March, which was again the complete new downtick that we've had relative, basically where we're trading in late 2016. That being said, we really substantially bounced back from that. A lot of people are calling for a potentially a reversal to that, potentially getting to that 262 level. I'm not seeing that in the playbook right now. I'm not going to be giving my opinion. I'm just looking strictly on the chart and what I have the knowledge of what I can control. That is nothing. You cannot control anything in the market. Since the parabolic SAR is slightly still printing above here on the monthly side, potentially the 5 and 8 are still kind of tightly wound. Has not broken below the 21 yet, so these are nothing too absurd to see. This really has to start falling apart on the monthly chart, and this takes, again, it's a monthly chart, so it takes months to start seeing a particular deterioration. To give you some perspective, so we can see that here within the 08-09 crash. So you start seeing the 5 and 8 exponential moving average crossing through the 21, not completely cutting through it and then continue going lower. We kind of saw it slowly gauge through it, kind of just trade sideways for a little bit, and then you start seeing the overall downtick of those moving averages being that first red sign here, potentially going lower. Again, closing well below the 50-day simple moving average there and kind of coming lower, trying to come back and retrace that, and this had that horrible sell-off there. That being said, that pattern is nothing really playing out here. Just being mindful of the 5 and 8 kind of crossing through here. Potentially with the squeeze in play, we could be seeing a pretty large uptick if the economy starts opening up, the jobs start coming back, and the overall consumer within the world, lack of better words, is willing to spend. So that being said, thank you for everyone for watching. Don't forget to like and subscribe. We have a fantastic Discord you can look at. We have a lot of active people on there that give really great ideas for day trades, for swing trades, and then a mix of both of the kind of trading mentality and investing mentality. And also we have a fantastic Patreon page that I post various interesting charts and just really give you more of a direct access to questions and things like that. And again, we're probably going to do a live stream sometime this week to look at some fantastic stuff. Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor, and I'll catch you guys on the flip side. Peace.